When they are down, they are down. When they are up, up. All right. There's no underlying asset backing them up whatsoever. All right. So for traders, so for someone like you that have short-term money, and you are afraid to risk it in stocks, you shouldn't even be thinking about crypto. because
frying pan to fire.
Because the risk of crypto compared to stocks like times 10. So that is the thing.
Yeah.
So if you're afraid of stocks, you shouldn't even be thinking about crypto at all.
Yeah. I mean, crypto, if you look at Bitcoin, is so correlated to NASDAQ. And NASDAQ is the risky part of the stock market. If you look at this total stock market, you're looking at the Dow, S&P, NASDAQ. NASDAQ is more of IT. Very, very more volatile, more higher Sharpe ratio than, say, maybe a Tesla or so. Again, it's the same thing, right? So just be careful about when you're investing. I think where you are right now for what you want to do might be the appropriate asset class for you. Just be a bit careful on that. Yeah. Okay, with your permission, you're welcome. So let's just run. If you guys want to speak, let's take them, and then we'll come back to now talk about ETFs and individual asset classes. Let's get Jay Olayinka. After Jay, we'll get Reva, then we'll get Noel. Jay, can you speak now? Jay Olayinka, calling again, going once, going twice, Jay. And we're back on YouTube. Sorry, the YouTube guys said they couldn't hear. Put it back on YouTube. Go back and see if you can hear now. If not, we'll just shut that down. Reva, you've got the floor, Reva, Reeva.
Yes, hi, thank you. Good morning.
How you doing?
I'm very well. Happy Sunday.
Happy Sunday. Thank you. What's going on with you, ma'am?
Yeah, I'm also a person too, but I've always believed that it's like same estimate. So it's going so good out here. So I just have a question. Even though he has explained that it's good to, as young people, to do more of stocks than T-bills instead of sleeping and the 40% and all that. Anyway, I just want to know, please, is it okay to ask about a particular stock? Because this week, I want to get a
try now. Try him. He's here. Try him. He's here.
Okay, so this week I want to buy custodian, what's it called? Tantalizers and Nestle. So is this safe to buy now? Like, what are your projections? And all that?
So I had custodian, I had tantalizers, and what else?
Yes. Yeah, I mentioned custodian, tantalizers, and Nestle. Yes.
And Nestle. Okay, she's asking.
Yeah, Nestle, yes.
Nestle. So,
like just projection based on the old new investments that are, especially tantalizers that is about to pump in a lot of money, because I read their reports and all of that.
Okay.
Thank you.
Okay. Did you hear her? She's asking about specific stocks, tantalizers. I think it was Nestle, and I read the last time. Yeah, what's your take? Custodian. Custodian.
In selecting stocks, you have got to know the reason why you are selecting them. What is your objective? It is extremely important that you determine what your objective is for deciding to buy the stocks you've decided to buy. Or are you looking for short-term capital appreciation? Are you looking for growth, or are you looking for dividend? That is income. All right. So if, for instance, if you look at all the stocks you've mentioned now, the three stocks you've mentioned now, that for me, from off the top of my head, I can identify three different reasons why people will buy such stocks. For instance, someone that is looking to buy Nestle is most likely looking at income, because Nestle is a dividend pay. It's not necessarily a volatile stock that you can expect capital appreciation from. Custodian has moved significantly in the last 1 or 2 years, and except of course you will expect that it will continue to rise. I will assume that maybe because you are buying it for dividend too, because it's also a company that pays dividend. Tantalizer is not a company that has paid dividend for a long time. It is only recently that it has started going up. But you said you have read some information about.
They're going to get some investments. Somebody has invested a lot in them. I think it was last week. They had a major investment.
Yeah. Last week Tuesday, yeah.
So if you feel that those investments will come through positively for them, why not? All right. So that you might be putting money in for trading purpose and all of that. You understand what I'm saying? Then it's not bad. But the critical is what you are doing, which is ensuring you study and you know about the company you are buying very well. And importantly, also ensure that you give whatever investment you are making a good enough time horizon for it to reach its gestation period. The idea that people want to buy stock and start making money tomorrow, that even if you do make money tomorrow, don't take it as it's a given. All right, because that is what disappoints people at the end of the day. When they buy stocks and the thing does not go up, then they will now be saying, they give whatever investment you made to actually reach its maturity. All right.
Yeah. Okay. Thank you. But for me, it's long term actually. But I understand. I'm not in a hurry. So, but please, one more question, and that'll be done. Please. So, say I have like 2 million naira. Should you advise? Even though it's not personal. Should you advise I put the money into treasury bills, and when I flip the interest, I can now invest in stocks, or should I put the money in stocks? That's my final.
Again, it also depends on when do you figure you will need the money? All right.
If the money like 6 months maturity date or maybe 3 months maturity date.
If you put the money in treasury bill now, then you won't have the money. You won't have the money to put in stocks anymore now. All right.
No. What I mean is when you flip the interest, maybe you can flip it like in the period of 1 year, 3 months, and that way you're putting on.
So the problem is
opportunity cost.
Yeah, that's it now. If you have 2 million now, let's even say for argument's sake, you put it in an instrument that is paying you 15% for 6 months. The maximum you will get out of it is 300,000. And they've locked down the 2 million. You will have locked down the 2 million for the next 6 months. You can't use it to trade. All right. The problem is that within that 6 months, the market will have done 10% or even 20%. All right. So the opportunity cost is you will have gotten 300,000 where you could have made 1 million naira if you have put this money in stocks. All right. And I can tell you right now, I wanted to see this much later. But the fact of the matter is that what makes stock price moves is not limited to the performance of companies alone. Government policy has a significant role in the direction of the stock market, as I've mentioned before. And right now, what we're seeing is that in the last 1 week or thereabout, some government agencies have put out some policies, that will make the stock market, continue to be bullish for the rest of the year.
So they like what, please? Like what?
Well, I wanted to wait to later to say it, but I might as well say it now.
Okay.
There are various types of investors in the stock market. Individuals such as ourselves are one group. Foreign investors are another group that invest in Nigerian stock market. Then local institutional investors are another group. Among the local institutional investors are pension fund managers. And I'm sure, as you have read in the paper recently, the total amount of pension, Nigerian pension, that the PFAs, that the pension fund administrators are controlling, is something like 24 trillion naira. Now, hello?
I can hear you. Yeah, go ahead.
Now, last week, the regulator of that industry released a circular, an investment guideline, that essentially that essentially encourage or require that pension fund administrators should increase their exposure to the, and the reason why they have done that is that the pension not able to really fully invest the fund they have in their hands. So the regulator have now permitted them to increase their exposure to the equities market. So, for instance, a fund that was permitted to increase to have an exposure of 25% before, all right, have now been permitted to increase their exposure to 35%. So a fund that had an exposure that has an exposure limit of 15% before have now been permitted to increase their exposure to 25%. And because these guys are controlling trillions of naira, increasing their exposure limit means that you are essentially telling them to bring trillions of naira into the stock market. And what do you think will happen? What will happen is that the few shares that are there in the market are now going to get significant patronage, because obviously the PFAs will only buy good stocks. They will only buy solid stocks, blue chip stocks. So those ones will not get a lot of patronage, because not only are they now being pursued, not only are they being pursued by retail investors such as you and I, they are also being pursued by foreign portfolio investors. And now the PFAs, who are the local institutional investors, will now have more money to even pursue those stocks. So if you look at it, the stock market probably gained an aggregate of 5% last week. This week, that trend is likely to continue. All right. So if I have money now, I will not even consider any other asset class for now, other than stocks. At least for now.
So, and again, to know what I've done it for you, I'm sharing what you're saying, because if you guys can go to Arthur Stevens' website, I'm also going to share it on Twitter. I had a report on this published 11th of February, where they're talking about the likely market impact of PFA's investment regulation and BDC participation in the NAFEM. So I'm going to share that report. Essentially, when you want to invest, you follow the money. You don't follow, you follow the money. So if PFAs have trillions and they're going to invest more, there's a PFA index, a PENCOM index in the Nigerian NGX. Look at that PENCOM index. That's where the PFAs are going to buy shares in. So you can front run them and go and take position there. So number one, look at the PENCOM index on the NGX. Those are what the PFAs are going to buy, and they're going to do more.
There's about 30 stocks on that index, and those are the stocks that they are going to be going after. And we are saying trillions of naira is going to be following those stocks in the next foreseeable weeks. So any investor, it's a no-brainer than to just also follow those stocks. All right.
Yeah, I'm sharing that now right now today, so folks can just go to Twitter and also to your webpage. Your handle is there, so I'll share that with them, so you guys can just basically go there and you can see the report yourself. Let's get Newell. Newell was here. Let's get Newell. Newell, you got a question?
Yes. Good evening, Oga Carlo and our guests.
How you doing? That's Tunde. Happy Sunday to you, sir.
Happy Sunday to everyone. Thanks for this opportunity. It's been very great, exciting presentation. The guests have done a great deal. I actually wanted to speak from two perspectives. One, as somebody who invested when I was much younger, maybe in my early 30s, and the impact of that, and someone now in my early 50s. I sold my car in 2007. Fidelity, Zenith, IBTC, and Transcorp. Honestly, as we speak, if I sell off all these stocks, you wouldn't buy that car that I sold in 2007.
What did you say? Say your stocks again. Quote your stocks again.
I did Fidelity. I did IBTC. I did there is one manufacturing Japol then in those days. I did Transcorp. All these that I'm listing here. I even did Dangote Flour, even though the money was returned. There was a time Dangote went public and had to return the money to those that bought the shares. Now, two things for me could be, maybe as a young boy, I invested, let's say at that time was about 900,000. I wouldn't know if I'd invested that in one particular stock, let's say Fidelity, and maybe took, let's say, as at that time, maybe 100,000 units. It could have made more sense than spreading it in all of this. But then, when you'll be told that don't put all your egg in one basket. For Transcorp, we all know the policy around it, that it was actually government regulated. For whatever reason, Transcorp wasn't a good buy for me from experience, because since the unit I got, I'm not sure that time.
Mm.
And so asking myself, Emmanuel, if I had invested this money on land, I was working in at that time, 2007, to be very specific, be worth more than the value of all these stocks. In fact, recently, when I got all the accumulated dividends on all these stocks, I'm not sure they were up to 100,000. That's one.
Noel, Noel,
the issue of government policy somersault.
Noel, I think you made your point. Let's address it real quickly. Right? Before Tunde answers, right? Have you done an analysis to say what the portfolio itself returned? Because you are saying you can't buy the car. So what did the portfolio return? Because Naira has devalued, and if you can't, nobody can buy a car today, or I think even if you bought land, Naira in 2007, Naira was below 200 Naira or so, right? Naira was below 200 Naira, Abi? 207.
Something.
Because I know in 2002, Naira was about 100 and something. So what percentage return would you have made on the stock market to be able to keep pace, not with inflation now, but with Naira devaluation? So have you ever done a report to say this is what two things where the portfolio could have made 100% return, beating inflation, but cannot match the Naira devaluation, which is that's a sovereign issue now, that you've made the Naira profit, but the Naira profit cannot keep up with the inflation to buy a new car. Cars are imported. Have you done that?
Maybe I didn't look at that, but I'm looking at it holistically from the point. It might not even be the value of the car per se, you understand? But there may be something significant that the return on that investment, it could actually be what, I compared it, I asked a question that, what if I had invested this money on land banking and the stock? Could it have been, for me, looking at from the value of land in those locations and what it is now, and the value that I invested in stock, I'm thinking that land could have made a lot more sense to me if I did that with the same amount.
What do you think?
Let me ask you. You sold this car 2000 and what did you say?
2007.
And you bought Stanbic IBTC.
I bought Fidelity. I said here that I wouldn't know if the unit, because for example, Fidelity, I didn't have up to, as at that time, I didn't have up to a 20,000 unit of it. Zenith Bank, a Union Bank, IBTC. So I asked a question here. Could it have made sense if I had used the entire money, let's say 900,000 as at 2007, and invested it in Fidelity alone, or Zenith alone, or Union Bank? But remember, we are told that you don't put all egg in one basket.
Let him answer you.
All right.
Let me say this. 2007 was prior to the global financial crisis, which happened in 2008 and 2009, which means that chances are that you actually bought those stocks relatively high, because the market was pretty high in 2007 before it crashed in 2008 and 2009. But even then, which is the point I made previously, if you are still holding those stocks till today, you will find that not only as the price of those stocks recovered, most of them have probably beat the price you bought them for 2024. I would like for you to reach out to us maybe tomorrow, and I'm sure we can be able to do evaluation for you. Because most of these stocks you have mentioned are actually good stocks. Stanbic IBTC, I can assure you, as at 2007, was probably selling for 16 naira. Today, Stanbic IBTC is 124 naira. That's times 10 or more. All right? Fidelity 2007 was probably something like 5 naira. Today, Fidelity is 20-something naira. All right? So, the same thing for a lot of the stocks you mentioned. So, I think there's a problem with your valuation. So, if you reach out to us, I'm sure we can do valuations for you. That's one. Secondly, I can assure you with all clarity of mind, all right, that yes, while land has appreciated, all right, but in terms of return and an ability to beat inflation for you, you will have done much better in your stock investment than putting. But I mean, the additional advantage of the fact that you can really compare them. You cannot. You can't.
Dollar was about 120 back then again, and today
that's what I was saying. But I mean, regarding the valuation.
Yeah.
Right.
So I think I think he made money today. His portfolio made a lot of money. Yeah, his portfolio made a lot of money. I think it is when you don't compare that portfolio to Nigeria as a whole, because you go from 120 today, dollar is 1,200. In 2007 it was 120. That car is imported. So to import that car from Holland would have cost him 120 per dollar. Today you have to bring that same car in at 1,200, 1,300 per dollar. So even if you make 200 and 300% on your portfolio, which has beaten inflation, has given you more than enough excess return, you still can't buy that car. It's a function of it's not a stock issue. I think you get the point I'm making, right?
Absolutely.
Fantastic. Absolutely. Great question. You guys have tightened it up. And I'm trying to share this. Go to the website. It's Arthur Stevens. Go one space over. You'll see the Pencom circular there, how they've analyzed it. I will try to share. Tunde, let your guys also share, Tunde, so that I can also retweet that. I just did a snip of that particular thing here. So if your guys can share.
I will share the circular itself.
Perfect.
Sorry, that's a lot.
Emmanuel, let's take it one by one, right? So let's get Adebayo Ayiti. Adebayo, please go ahead. Adebayo.
Yeah, thank you, Kalu. Thanks, Mr. Tunde, for the very insightful presentation. Just while you were talking, I went through Kalu's timeline and I saw that I shared your company's website. I've gone to the website. I've tried to open an account there. It was quite seamless, I must say. So very well done to your team for that. But I haven't gotten the notification to that effect. Yeah. But hopefully, because today is Sunday, hopefully, I'm sure probably tomorrow I'll get a notification and I don't know.
No. I'm sure.
Sorry, I can't hear you. But if I may progress, right, I'm coming to you because I have companies that I'm looking to buy on Nasdaq. I'm coming to you. I'm eyeing, maybe I can manage. But I just wanted to find out if I have an account with you and I need to trade on Nasdaq. Do you have dedicated relationship managers that I can contact to place my trade? And if yes, how do I contact them?
Absolutely. I'm sure since you have opened an account now, you will have gotten an email. Okay. Well, I mean, if you don't get it today, you probably get it tomorrow. Okay. But please also check your spam. Sometimes these things do go to the spam.
Okay.
You know, so there will be contact email, the email that you're going to get, and if you call those numbers, you will get someone. You get directed to a stockbroker that can always take money to trade. All right. Excellent.
Fantastic. Yeah.
Excellent.
I like that
Right.
NASD angle he's bringing in here,
welcome.
the NASD angle, because lots of folks just look at the quoted stocks. There's a massive milk company in Nigeria that is not on the not yet.
Can I speak now?
Emmanuel. Okay, Emmanuel, go ahead.
Hello. Okay. Are you still there?
Tunde,
No, this is Emmanuel.
Yes. So yeah, thank you, Tunde. I was just saying I was very interested in the NAS quoted, but on that NASD. So I like that he's also introducing that as well into the mix. Yeah. It's a massive milk company that is not quoted, but it's a good he brought that up. Emmanuel, go ahead, real quick.
Before you go on, as you mentioned, is the largest off-taker of off-taker, right? And it's listed on the NASD. It's not listed on the normal market. It's listed on NASD. So if you need to go to MRS, that's the market you need to go to. And like Emmanuel has mentioned, I mean, opening accounts to get access there can be done in 5 minutes.
Fantastic. All right, let's get Emmanuel. Emmanuel is on hold. Emmanuel, go ahead.
Yeah, thank you very much, Carlo, for the great work you're doing. Really much appreciated. I just wanted to have a pointer that's a counter to what Tony was saying about if you had bought stocks that were bought in 2006 or 2007, depending on your portfolio, you should have recovered that money by today. If you look at the NGX today, some of the prices have actually gone up. But if you now benchmark this against the level of inflation of which we have had within the past 10 years, you can actually realize that a lot of stock have actually lost money in real terms. Though in absolute terms, you can look at the amounts and think that, these stocks have gone up in price. But for people who bought stocks in 2006, I started in 2005, 2006, but just cashed out before the stock market crashed. So it didn't really affect me, though I still had some stocks that were left. I wasn't numerically in absolute terms, but in real terms, I have lost money against inflation. Because, for instance, you can look at Zenith Bank as of, I think, 2015 or thereabout, it was trading as 20-something Naira per share. And then if you look at what the exchange rate was about the dollar and to where the stock is today, it's not a great deal very different. Do you understand? So when it comes to land, especially when you have landed asset, land in a major city, I'm not talking of in a village, but if you have land somewhere like in Lagos or Abuja, land is the only asset that rises commensurately with inflation. And one other thing I would say is, like, currently there's been a lot of foreign direct investment into the country because the dollar has been systematically falling since Donald Trump came in, and there is the cutting of rates by the Fed. So the Nigerian stock market, with the level of interest we're offering on treasury base, a lot of money is coming into Nigeria. So the stock market is riding a bull wave. And all I'm going to say to people is they should pay attention to what is happening to the dollar. Because the moment the Fed, at some point, interest rates will start rising in the US. And once that happens, the FDA foreign portfolio will take a cash flight. And then our stocks will crash, which is very similar to what happened just during the credit crunch as well. So while people are making money now, it's a bull market. Everybody's happy. Portfolios are in green. I will ask people that before you invest in
okay. We've got your point. We've got your point. So he's saying 2 points. Number one, he's saying that on an absolute basis, not relative, that the Nigerian stocks have not beaten inflation. He says property is the only that has beaten inflation. I disagree. Number two, he's saying the Fed is going to raise rates. I don't see the Fed raising rates.
I didn't say that's immediate.
Hold up. Emmanuel, hold up. We have a new Fed. The reason why Trump is fighting with the current Fed guy is because he refused to drop rates. So as long as Donald Trump, this is just Tony is going to answer the first point. As long as Donald Trump is president, rates are not going to go up unless they have to. If rates in America are down, I made this exact point Emmanuel made. Nigeria's central bank chairman today is a guy called Walsh, not Cardoso. Listen to what Mr. Walsh says, and Cardoso, not just Cardoso. If Mr. Walsh reduces Fed rates, the Naira does well. I say it again. If Mr. Walsh reduces the federal rates on the US dollar, the Naira gains. That's the trick there. Because an investor in America is getting less than 1% in his bank, he's getting 3% in treasury bills, which is their version of fixed deposit. So why would you do 3% when you can get dollar, not Naira, dollar 8% in Nigeria, Naira 20%? Look at dollar 7-8% Nigeria versus 3 to 1% in the US. The same dollar in Eurobond. So the Americans are taking their money, going to Nigeria to invest. That's why you see foreign portfolio investment. I saw the report today. 95% is going to banks and financials. Only 4% is going to FDI. So the bulk of money is entering Nigeria like crazy. That's why, because dollars are coming into Nigeria. Today, you want to take the first point you made about inflation, vis-a-vis real estate.
You see, the thing is, the thing with statistics and data. I hope I'm audible.
Yes, you are. Yes, you are.
The thing with data and figures is that it depends on where you're looking from. He said his start date was 2026. You have to ask, okay, what was the stock market doing then? And then what happened consequently? Between 2026 and 2028, we had the global financial crisis. During the global crisis, has bought the bottom. You cannot tell that person that they have not beat inflation in real terms now. All right? So that is the thing with it depends on where you are looking from. All right? You cannot. So if you have bought Zenith Bank at 30 naira, all right, and Zenith Bank today, for instance, is 15 naira. Yes. Okay. Maybe you are Zenith Bank specific circumstances. All right. That's what I would say regarding that. But look at it. All right. I mean, there are so many empirical studies to the fact that the stock market has beat inflation both in nominal and real terms. They are there. They are on Google. Just go to Google Scholar. The reports that the empirical studies are there. It's not about just talking about it. All right. So that's what I would say. And like you, just to back you up, the chances that rates will go up now is much lower than the chances that it will be coming down. As you mentioned, the tendency is that we are going to see rates dropping rather than rates going up.
Yeah.
And the idea behind investing in the stock market isn't for you to invest and take your eye off the market anyway. You're supposed to continue events and take decisions based on what is going on within your environment. All right. Thank you very much.
To that point, let me also ask you this question. When we see foreign portfolio investment coming to Nigeria and it's affecting the Naira, it's affecting the stock market, but it's not going to the core industries, is that a risk factor? Are we building this market on foreign hot money that can leave? Is that a factor we should be worried about? Because the man also saying, he's making a point that when we are investing, we should also consider the other swing side, i.e., this is money coming to Nigeria. It's not Nigerian money. If anything happens, if there's peace in Ukraine, that would affect the market. Should we be worried as well?
Well, I mean, I wouldn't say, okay, look, there's no cause for worry. But I will also point to the fact that, in an economy, what you see is that in an economy that is viewed as stable and favorable to investment, what typically comes in first is the foreign portfolio investor.
Okay.
The foreign portfolio investors are the ones that serves as a signal that yes, we are comfortable with this market. That's why I'm coming in. And then that is when the foreign direct investment now follows them.
Interesting.
All right, and we're already seeing it. I mean, you saw Shell announcing, they are going to put 20 billion naira in Nigeria. You saw Coca-Cola announcing increased investment in Nigeria.
Interesting.
And what you are also seeing, and what most people have not taken note of, also is that the local companies are now issuing fresh shares. All right, they are doing public offers that they've not been doing for the last 5-10 years. You are seeing a lot of companies coming out to do public offers. They are doing rights issues, and you will be surprised that a lot of these foreign portfolio investors are going into buying these public offers and these rights issues.
Gotcha.
Which means that we are seeing a gradual transition.
Gotcha.
Sorry.
Well said, Tunde.
Which means that we are seeing a gradual transition of the foreign portfolio investments into direct investments. Because when they invest in this public offering, they are actually now giving money directly to the companies. They are not only trading in the market. They are not only trading only existing shares. When they buy public offer, they are actually giving money directly to those companies. All right. So, but typically in every situation, what you the reverse is never the case. Foreign direct investment is the one that comes first before foreign portfolio investor. No. Typically, the foreign portfolio investors serve as a signal that yes, things are
all right. To get Chinyere has been requesting before I add her. Let's get LMAO. Let's keep the question. I've got Tunde for a very, very short time. He's been here for nearly 2 hours. I'm sure it's going to leave very soon. Let's just go straight to the point. Let's get LMAO. I've got you. I've got Alafin Twitter. Then we'll try to get Chinyere. LMAO, go ahead.
Good evening, Mr. Carlo, and everyone.
Yes, go ahead.
You can hear me, right?
In stock position in the company. If that makes sense, sir. Yes, sir.
Carlo, I think he's talking about ETFs, ETFs and shares. I think he's talking about ETFs and shares.
Is that
Yes, ETF, their bank cards and stuff. So I think which of them is good for a very long term for like 20 years or so?
I think again, it's going to be the same thing. You want to ask yourself why you are buying the individual stock or the basket. Like we said at the very, very beginning, the basket gives you instant diversification. It is cheaper to build a portfolio with that. So it's sort of you are buying it cheaper than if you are buying individual stocks. Imagine if you had to go and buy all the Nigerian banking stocks. How much do you need to have to buy all Nigerian banking stocks? You just buy the Nigerian banking index and you get exposure to the banking stocks. So that's how I'll look at it. Both of them are going to be constituents of equity, right? So it might be cheaper for you to just buy the ETF and all that, especially an ETF that you can trade during the day. It's almost going to be the same. But if you have the funds, buy the individual. You can build your own ETF 30 of top 30 stocks in Nigeria. You can do that. But why do you not do that? Do you have the time or the management to really manage that portfolio? Hope that makes sense, sir.
Yeah, thank you very much, sir.
Okay, fantastic. Let's get Alafin Twitter. Then let me add Chinyere again to speak. Alafin Twitter, go ahead.
Yeah, good evening, everybody.
How you doing, sir?
Yeah, I'm good. I just want to give a little advice that people should just be careful of fear of missing out.
FOMO.
Because basically, many factors drive the stock market. An example is news. I heard us say Tantalizer is.
Are you still speaking, sir? I think he has dropped off. I can't hear him again. Anyone else can hear him? Let's get Dubia. I can't seem to hear him again. Let's get Herr Fortune to hear the gentleman speaking. Herr Fortune, you want to go ahead and speak? Emmanuel, can you hear me? Tune, can you hear me?
Yes, I can hear you.
Okay, I think the other gentleman dropped.
I can hear you. I think the other gentleman dropped. I cannot
okay.
Hear you.
Let's get these two guys and we'll start to wind down the space, right? So we've got Dube here, Fortune, and then we'll get Ifrex Trading, and we'll sort of start to wind the space down. So Dube, if you can hear me, please go ahead.
Yes, I can hear you, Mr. Kalu. Good evening.
Good evening, go ahead.
Yeah, good evening, sir. I guess. Sorry, what I wanted to ask, right, has already been mentioned and spoken about, right? That's all. I already heard what I wanted to ask. So
fantastic, not a problem. Let's get Ifrex Trading, behavioral finance, hotspot for real traders, derivative trader, year 6. How are you, sir? Good evening to you, sir.
Yeah. I listened to Mr. Olatunji. He was just giving some analysis of how the stock market has been behaving. And I think he made mention of a real estate being able to perform very well. And then we are trying to counter like a little bit of that the stock market has done very well. And also he said that it depends on the perspective you are looking at or your circumstances, So now my question is, looking at the stock market in the last 5 years, has it been able to beat inflation squarely? That is my question. Like in the past 5 years, looking at the NGX.
Hello?
Yeah, Tunek, did you hear his question? He's asking in the last 5 years, has the stock market beaten inflation in the last 5 years? Simple question. He's asking.
Yeah, I believe so. I believe so. Even if it has not, it has kept pace with it.
In the last 2 years, it has. 2025 it did. 2024 it did. And the other years we didn't have galloping inflation. 2022 was not 2022 when Nigeria's stock market was the best performing stock market in the world.
Yeah,
the year when Dangote did that right,
it was after
buyback or something like that.
Right. It was after COVID, and I can assure your listener that this year, Author Stephen, if you have not seen the outlook we did, if you did not participate in the outlook, we can, I will send the outlook to Kalu to post on his Twitter, and we have predicted that the market will do 45%.